right. Well, thank you, Scott. We're gonna try and figure that out. Hello, Andy.
Hey, Scott. Hey, Steve. Hi, everybody.
There he is. There he is. All right. So welcome to the Tuesday um, webinar Trade of the Week, part of our afternoon series here. We'll get started with the usual as people file in. Smart people know that we go through these same slides for the first. Yes?
Do you need to show your screen again?
I might need to show my screen. Let's take a look.
There we go.
You see it? Okay, good.
There we go. Yep. Got
Great.
it.
All right. Thank you for that. So here we are. Disclaimer, just a reminder, we're software as a subscribing service for stock market data in real time. Pretty cool stuff. I've been using it forever, and so has Andy. So what we're going to talk about today is really not to be construed as financial advice for you guys, even though we're going to talk about a couple of interesting ideas. Hashtag not financial advice, but this could be an interesting one. We're going to take a look at a few possible bigger picture moves this afternoon as we get deeper into the webinar here. So just a reminder, past slide, we're not financiers using this program. We've seen a lot of changes come and go, and it just gets better every year, but it's not something that can be learned overnight or learned quickly. And that's why we try and do our best to make as many live available with. There's many different directions you can go with this program. You want to be a crazy day trader, playing low floats, looking for when the music stops, musical chairs kind of trading. Bigger the risk, bigger the reward, go for it. That's awesome. If you want to be a slow-paced, have a real job, but also have a nice trading swing account on the side, and you want to look for 2 or 3 day moves, it's all available. But it's hard to learn in one week. It's hard to even learn in just a couple. So, we're here to try and help your learning curve be as steep as possible. We were doing on Friday and just made it Monday through Friday now. So at any time, newer users can have the webinar, what I mean to say is a live YouTube feed. No registration, no emails, no clicking in, downloading software. No, it's just a YouTube link. It's super easy. So pop in there from 12 Eastern to 1. We do that every day to try and help you guys, set us in tune with work and school and what we need. We're going to emerge from this probably a different society in terms of what we're willing to do from home and what didn't do in the past. But and it's not just a machine's job to do it all for us. It's not something we can do by ourselves. So we use the combination of man and machine, and Trade Ideas is a perfect example of that, giving us a beautiful curated list of ideas. Going back to what I said, you want to trade in real time, crazy fast, we can do that. You want to trade end of day, simple scans, we can do that. We're going to do a little bit of that too going forward. So let's get started. I'll do the market read. There's an Easter egg in there in terms of Apple. It really is time to go back to the drawing board. Maybe the day traders, the maniacs, but for the swing traders like we're doing, invent what we're on that. Things that we might want to keep an eye on, well, we will share those alerts and put those into. DAC is showing us, why is this so important to close? I mean, that was a close above, signs of hope. Mustard's closed. Yes, I'm on the cable devices that I can, but all right, and are the kind of the last S&P down more so, and we also had semiconductors holding the NASDAQ and the technology sector up yesterday. So kind of followed through today, but what we need to see tomorrow, and maybe we'll try and get ahead of ourselves, is maybe we'll see a nice vote in Congress tonight that'll give us the people out there who are just completely riddled with anxiety, and rightfully so, for many reasons, but financially, maybe some aid is coming, and if we can get that aid and the bill looks good, then maybe tomorrow we can get that close above the declining 10-period moving average in the S&P. I'm going to start to draw this as we're going to start to imprint on this. Maybe I'll fast forward a few days and we get a couple of range-bound days that start to sit above a flattening 10-period moving average, as opposed to being slammed down by the 10-period moving average and then some. So real interesting inflection point that we're approaching here tomorrow. We'll see what happens, but we would like to see tomorrow the SPY look like the Qs did today and get a close above, so we can start to say maybe we're on the road for some sort of stabilization, because nobody really wants to jump in and be the first institution or the first money manager or the first trader to try and pick bottoms. You're going to get a lot of stab wounds in your palms trying to catch falling knives. So we're going to talk a little bit today about how to use Trade Ideas technology with a new scan that we've got to try and find some quality names that just were beaten up too much, and then we'll take it a step further on the chessboard and tie it together with this bird in the hand, but I don't want to get ahead of myself. The IWM, let's see if we can bring that up. All right, IWM pushing the issue today. This thing, was not bouncing at all. It was, matter of fact, just the sideways action is usually met by a continuation pattern, but I don't know, it might be different this time. And that was the case back here as the bounce moved in and the 10-period moving average like clockwork threw it lower. And typically after, consolidation, we might see a continuation pattern, but I think we are so oversold. I mean, we have literally, we're 30, 35% off of the highs in terms of the Dow. We've given back so much, and we'll take a look at how much we've actually given back. Almost 3 years worth of growth in a period of a month. And so that may be different in this case. This is showing some fight here. A nice bottoming tail showing some fight. Maybe we can get the IWM, the Russell 2000, the small caps to show some buoyancy and get a close above that declining 10-period moving average tomorrow. We shall see. So far, those are the 3 ETFs. Let's see if we can bring up the diamonds. Similar, very similar to what the S&P looks like. So, NASDAQ led the way with the Qs, giving us a nice close above. That's the only one I could see for sure getting a close above. Real quick, while we're on it, yesterday the airlines were strong and they followed through today as well. They didn't go to lows yesterday. They held strong. Gold miners, big move. I'll talk about it right now. I took a position in our swing account. Andy saw it. And the reason I did it is, going way back, I remember this silver miner, it's part of the gold miners, but this silver miner was in so much favor back here, tons of interest. And then this thing was absolutely crushed, just like a lot of things decoupled and went crazy. But what did I notice today? I wanted so badly to buy it yesterday, but I said, why would I buy it yesterday, Steve? It's absolutely showing you nothing. It's below the moving averages. Well, I'm telling myself, I want to get into it before the pro gap up. Well, Steve, what makes you think it's going to have a pro gap up? Well, talking to myself here, just a little intuition, but I couldn't force myself to buy a position that technically wasn't sound. So I waited, and today we got what we would call a pro gap up. Going the opposite direction, it wasn't a down gap, it was a reverse neck snapping gap. So most of the buying today was probably short covering. And when you see a pro gap, which is this space right here after a tremendous downside, that's the opposite direction gap. A lot of times these things will build on that and they won't look back. So I'm going to try and hold on to that as a position, but digressing again on the concept of gold miners have been pretty strong. You can see it there, the GDX, gold miner juniors, and the regular GDX, both having pro gaps as well above that technical mess that we had coming out of yesterday, but into today, after today, I should say, looking a lot better. Home builders, solid balance off lows today. What looked horrible? Well, the treasuries were trying to hold up, but they gave a little bit back today. But look at this heat map. I don't think we've seen a heat map this green with not any red on the bottom for a long time. You really couldn't do much harm trying to nibble on something today, and that's what we're going to talk about. Nibbling some possible ideas. It doesn't always have to be the full load, full size. More likely to do something quarter size, but we'll get to that. So back to the market. It's been a tough one. We all know how hard it's been, and swing trading has been extremely difficult. When you have red, green, gap, red, back to green, back, gap, down, red, green, that is extremely difficult. So anybody who's been doing really well in this market more than likely has been riding some really good day trade movements. The 4 of us in our other swing trade account have been dipping here lightly, been doing pretty well, but very short-term lived trades, and things don't really follow through. The idea is to try and use this tool here now to try and find some things, and if this is a generational low, which it very well could be, I'd like to maybe have some dry powder for some things that might make sense going forward. Anything you want to add to this market chaos, Mr. Andy?
Yeah, I think see Brian Shannon, he always says, guilty until proven innocent. Yeah. I think we're still, the jury is still out because everything is still below that fast line, the 10-period moving average, which is coming down. Steve is right. I mean, tomorrow could be a day, where we can push through, maybe hit a 5-day high and close above that green moving average with something to build on. But I think as far as a great day today, I think surprised a lot of people closing on highs like that, even myself. but there was some good, definitely some obviously some good stuff, coming out in the news, and so hopefully, if for the bulls, I'm not going to say hopefully, just in general, because some people may be shorting this market, but yeah, I think if we can get above that 10-period moving average and hold a few days above it, and then maybe we can build from there and move up. I will say this: I do not expect this to be and I've been wrong. I think there's been some damage done fundamentally, that to be just a huge V shape like we've seen over the last 10 years on these pullbacks. That doesn't mean we can't have a nice run, but I think it's going to take some time. Could be a good trading environment, over the next several months, but time will tell. But nonetheless, yeah, it's a great trading environment. But that's it, Steve.
Yeah, I mean, I agree. The one and only thing I'm going to be looking for tomorrow is where did we close these S&Ps in relation to the 10 period. Does it butt up right against it? Does it close above? Does it get rejected with a wick and close back below and all bets are back off again? I think tomorrow we're going to find out, at least tomorrow or the next day. And we're going to hammer this point home for the remainder of the webinar. We got to get this momentum 10-period flat line, 10-period moving average starting to flatline and get some closes, whether it's an individual stock name or these averages. We're going to have to see that to start building on some constructive price action. Tomorrow, yeah, Randy, I was going to say that we could see a simple, stupid little doji, a doji right into the moving average, and then make us wait another day and decide, if they're going to punish us overnight to be a horrible gap down, or, either way. But we could be setting up for a go pause go. Correct, Randy. Good thinking. Well, I'll send it over to you if you have anything you want to show.
All right. Yeah, there's some pretty good stuff actually. Let me grab it. All right, we're going to focus like we have been doing on Holly Neo. I shouldn't say Holly, I think it's just a Neo AI we call it. It's, if you look at the channel bar, it's the third one down. This is the newest. We launched this back last November, I believe. For Steve, has been on the Holly Neo because these are usually stocks with interest that are showing huge volume, and you can get some pretty good moves out of these stocks, as you will see today, in the case with iMac. Okay, I'm going to go over a couple of trades here. I thought were some beautiful little setups here. This was just a strong, huge. Look at this relative volume today, guys. Let me cut on my little mouse here. This 404 relative volume. That is unheard of. You can see the volume bar on the daily chart here. This is why, you don't shy away from a stock that's maybe up, 300%. I mean, nobody wants to chase a stock that's up 300%, but look what it finished at, up 777%. Now, that is unusual, but nonetheless, Holly, as it kind of went sideways here, had this action this morning, and what did you have? You had a break above. You had a channel, kind of a breakout right there. And it did pull back, nowhere near the stop down here, but did pull back a little bit. If you could have stomached that, then you had a nice little follow through, and pretty much all day long. And I want you to take a look at this column here. I have moderate profit percentage. I want you guys, if you're not using this column right here, to maybe put it up, because you're going to notice a lot of times, especially if you're watching Neo, these percentages can be huge. As a matter of fact, I like to focus on this column quite a bit because, let's face it, it's not necessarily how many points you got in a gain. So in other words, if you got a 50-cent move in a $100 stock, it's not that impressive. But if you get a 50-cent move in a dollar stock, that's a 50% move. That's huge. So you're going to find a lot of times in these calls where you're going to see some impressive moves. You can see 117% right there. We're going to take a look at this IBR, which was 21%, and look at this BXRX, 15%. Guys, that is value there. Okay, obviously this one was not good when it did go down to the stop, which was 20. So that one that hurts. But at the same time, as long as you're having a lot greater percentages to the upside, which in this case there's no contest. it is, you can see there's no contest, it's huge. Now going back to, that was IMAC, and I thought just as impressive, well, I shouldn't say just as impressive, but still a very good no pain call right here in this IVR. Gap down, volume is there, nothing like the last one, but six relative volume is still, 6 times greater than normal. That's good. Thus, we had some continued follow through all day. Holly called a short at 325. Finally closed the day off at 253, which was like I said, a 21% gain there. And let's take a look at this one last one, and then we'll pass it back over to Steve, and that's going to be this BXRX, which was also a short. And boy, it looks very similar to the last one. Early call this morning, 8:35. Both of these were 5 minutes after the bell rang. Early call, sell, no pain. Okay, you got the call, and you could have just sat back and turned it off, put your stop in, turned it off, and not even watched it. In the end of the day, you would have had a nice 15% gain in this one as well. So some really nice percentage gainers in here. Now, my tallies here are based on, I think, $100 based on stop loss. So obviously, this is not big size, 200 shares on a $3 stock, 300 shares. So you could have gone in with these with more shares and obviously made a lot more money. But still, based on my numbers here in moderate profit, that's a $560 just risking $100 a trade on 6 trades. That's a nice day if you were trading NEO today. So Holly 2.0, Holly, I'm not going to go over these 5 trades, pretty much, down marginally here in this one, up a bit, it's nothing really going on there to bring up and show you, but definitely some nice trades there in the NEO. Steve, I think that's about it. I'm going to pass it back over to you unless you have something you want to add to the okay.
No, somebody's asking what percentage of your portfolio do traders typically put into a trade like this? It depends. Somebody might do 1/20th, somebody might do 1/10th. When it comes to like swing trading, I kind of like to break it up into 10% allocation. Sure. Is this setting automated? I'm not quite sure what context that was asked while Andy was speaking.
Well, yes, friend.
Yeah.
Obviously, when you're looking at Holly and you're not that wasn't my brokerage plus, so everything is going to be automated just in your Holly when you're looking at your Holly platform there.
And then Christopher had a real life slippage issue, couldn't get a short to borrow for BXRX at IB.
Oh, darn.
Which click on the chart, and that gives me what I want. Start typing, which I'm going to do on Apple right there.
Right. I think a lot. I was even when charts first came out. I was. It took me a while too, because you think you would click and a box would appear, but no, you actually have to start typing.
It's not super intuitive, but intuitive enough. All right, so on to the portion segment that we call the trade of the week. And for the second time in a month, there was no harm. Real quick before I do that, Zuo was last week's, and it did exactly what we talked about. It had nowhere to go. We had a little bit of bounce, sure, a little bit of money in there, but where's it going to go? It just got slammed 3 days in a row. But today, it did close above slightly, but nonetheless, the momentum was all caught right there, and that's pretty much what we said to look for. Every single chart last week looked like this. We said just pick one, and if it bounces, great. Ride it for a day and a half, 2 days into the upper pocket of the moving average. That was last week. So this week, there really was nothing to do except say, you know what? Let's just sit back and look for cash. Let's see. That's probably, I'll get the right day here. There we go. That's what the market looked like going into the weekend. And there was just nothing. So the point was, hey, go to cash again, save yourself. Let's wait for some stuff to reset up, reconvene. But, and he pointed this one out, it's all him. If you're somebody who needs the action and you're sitting in front of the computer and you might as well, be alerted to something, giant look left scenario in Apple at the 215 level. What Andy was seeing is a major pivot level back here. Support, resistance became support. Major 215 level of Apple. And we weren't there yet. We were in the 220s. We were still up at this level. So the point is to, hey, set an alert, use our price alerts, and you can see the residual of it. That green price alert right there was it. And I remember in real time, and this is the way it always goes. Hey, what do you think? Oh, I don't know. Look at the market. Market's going to lows. Yeah, I know. In hindsight, what we need to do on these types of plays is at least try and trust our entry. The market doesn't really care that Apple hit its bogey for the moment. It might slosh around for an hour, but here's what we need to do. When these kinds of things happen, and we're prepared for them to happen, we don't want to get spooked in the moment because the market's rolling over, the Dow's down 1,200 points, and everything's falling apart. Buy 25%. If you're going to buy 100 shares of Apple, buy 25 shares at 215. Before you know it, by the time the day starts to progress, that particular level didn't look so bad. Builds it. Oh, look at that, a higher level into the close. All of a sudden, you're feeling pretty good, and then you're participating on the gap up. And what do you know? Pretty nice trade. Just simply looking back and looking left in history and saying, where do these things have the propensity to create a pivot line, which was prior resistance that became future support, or prior resistance became support. That was it. I mean, it was almost like everybody was waiting for that one. It was almost too easy. When the market makes it too easy, you got to be aware, because it's never that easy. But
it's not going to stay. It's not going to hang out there for 2 days and give you a shot. You're going to have to decide pretty quick.
You had about a 30-minute window here to try and figure out if you wanted it, and then you had a possible, if you missed it, you had a possible scenario to go, okay, well, look at that, it's pulling back here. If this thing digs in, maybe right here, I'll take it. So that was that. That was the trade of the week. I gotta say, I'm happy that Andy and I are kind of keeping people out of trouble here in this nonsense. We're not calling bad ideas, and the ones that are, triggering or at least working, and the ones that, when we call cash, at least that cash call 4 weeks ago, turned out to be pretty darn good. Ebook on it. This thing was constantly full of 50 or 60 ideas. The thing went basically blank on me in the last couple of weeks. There were days when there was just nothing in there, nothing in the scan whatsoever, because this scan is looking for kind of the cream of the crop, essentially stocks with high score values. It's all pre-programmed in there using our score filter. Anything 85 and above is what I had in there. And what I noticed was this window kind of morphed into something different. It became all of a sudden the window of things that were holding up in this crazy news-driven environment, like Zoom Media. I saw this thing back here, and it never really set up the way I wanted it to, and I was being kind of a prude about it. I wanted a perfect-looking chart setup, but it didn't really matter. The point was Zoom Media. I think we can all see in hindsight now what an interesting idea, and that why the buyers just lined up in droves for that. So, kicking myself, no harm, no foul. For some reason, pets now though. This might be an interesting one. You guys might want to set an alert on this. I mean, this has been absolutely crazy, but look at how PetSmart, PetMed Express, excuse me, people are not going out and shopping for their animals. They're using delivery services right now. So all it's going to take is a nice price movement, probably right above that level, roughly, eyeball it, give or take a dime. That could be an interesting setup. You guys might want to set that up. I'm getting that off of this scan, which has completely changed face. It's now showing me Teladoc. I think we can all see the wisdom in Teladoc. Again, yes, the charts are nothing. I mean, the charts are crazy looking, but boy, they are emerging from that craziness with vigor in buying. So keep an eye on some of these. This one I think is an acquisition. EVGB, this one looks like a software publisher. This is obviously something to do at home. But not too many names on here, but definitely, Zoom and PetMeds. I'm very interested in this Pets Express, PetMed Express. I'm going to leave that in there for sure. I have to dabble in that one. So this scan is no longer doing for me what it used to once do in the market that just kept moving higher. And I'd say week after week, there's no bear case in sight. All this level back up here, but now we don't have that anymore. We can't even begin to look for that anymore. Everything has been flipped upside down. And we're going to have to start scanning and looking for other ideas. Now, geez, just a couple of ideas. This is Avis Rental Car. I showed this yesterday. Picked some of this up down here and sold half today, but nice move off of earnings before the virus hit. Everybody thought, boy, the executives were calling their wives, telling them to shop for that lake home, that second home. Let's get it going. Mortgage rates are great. Nobody saw a $50 stock become a $6 stock in a period of 3.5 weeks. So what I want to do now is try and find some of the beaten up ones that didn't deserve to be so beaten up. One of the reasons Avis and Hertz were bouncing was, I think, they're part of the travel and the airline. Yeah, Jeff, I'll give you the copy of the A table right now. I'm going to pass out 3 items here today, save and share, copy this, a table, I'll paste the cloud code there. There we go. So I want to find some more stocks that didn't deserve this ass kicking that some of these stocks got. I mean, the jury's probably still out on something like Boeing that deserves the ass kicking it got. I'm also been long some X. I would like to trade around that as a core position. X closed above its declining moving average, so it gave me a little bit of hope for the first time today. We'll see if that can come out. Let's see if we can find some more of these that are just great quality companies, and so we're going to use the Trade Ideas technology to do so. I started with a scan that Andy created called Armageddon, and I added a few things. In terms of the filters, it's just filtering out for only stocks, ETFs, but we'll come back to EPS in a minute. Stocks have to be at least down 30 days. I think some of the things we just looked at that. So down 30%, we're going to see all those stocks above $4 and average volume 500,000, it looks like. Not a whole lot of filtering going on other than the show me stocks that are down 30%. That's the big crux of this scan. But what I've done is I've added a few columns, and I've also colorized this scan to match something which I think is going to be our important data point. And what is our important data point? Well, I think one of the easiest ways to try and find stocks that are beaten up, that probably didn't deserve it as much as they did, would be stocks that are making money, earnings per share. So what I've done is I've gone in and on the properties, I've selected the colors to point towards EPS. So, and I've double clicked and sorted that. So we can look at this many different ways. Let's look at this, position and lifetime range. These are the ones that are going to be the bottom. These are the bottom barrel, but that doesn't necessarily mean we want them just because they're at the bottom of the barrel. That's sorting by position and in range. I'm going to go back and I'm going to sort by earnings per share. Who the hell is making money and who's not? Everything down here, pretty much not interested. So we're going to focus on the stuff up top. All right, let's take a look here and see if we can figure some out. Well, Blackstone, well, that's the Blackstone Financial Group. I'm not really excited about that at the moment, but what I am kind of excited about is Delta Airlines. Why? Delta Airlines last reported $7.32 a share. It's fallen from 60 down to 20 in a pretty short period of time. So I think this might be one to keep an eye on. But the way in which we're going to try and keep our eye on it is going to be a little different. It's not going to be an all or none. Remember, I talked a minute ago about trying to leg into these things slowly, maybe a 25% entry. So what I want to propose to you guys is using a list like this, and let me just share it so we all have it. Save and share. And it's sorted by EPS. All right, so here's what I think the play is going to be going forward, and I've talked a lot about it so far. Are we going to get closes above respective down trending moving averages? Well, Delta got close to it today. Maybe it does tomorrow. So let's just say we can draw a price alert right there above today's highs, and that should get us above the moving average. And if we can get that, maybe it's a time to buy 25% of something like Delta. Okay, it's a starter position. It's not going to hurt us if it rolls back over and goes to low. It could, but 25% is not going to be too bad. This is really the best way to try and play these oversold bounces. Not jump in 100% and say, okay, I proclaim this is the bottom. This bottom might not be a V bottom like Andy said. It's probably going to be much more of a process bottom. And once that process bottom identifies itself, we can start to try and maybe work higher. But again, what I'm going to be looking for stock by stock, case by case basis is a flattening of the moving average and a pattern of closes above that flattening moving average. Well, once we get to there, if you got a 25% position, you're just kind of waiting. You're in kind of a holding pattern. And then we get into what I call the bird in the hand. And there's actually a scan for this. And there's nothing in here because we might be 7-10 days away from all the patterns, all the charts starting to look the same. Remember, they all look the same on Friday, diving to lows. Well, if we can get this market to stabilize and assemble a little bit, maybe we'll start to get some patterns where the flattening 10 period is holding up 4 or 5 days of price action. And from there, it just kind of becomes a waiting game. And that's why I call it a bird in the hand, because when we get that situation, the shorts start to get a little scared. The longs start to pile in because they start to feel a little bit more confident. And what this thing actually looks for is a new 5-minute low, kind of pecking on the hand, looking for a new 5-minute low, but most importantly, doing so at the, this is it right here, at the 10-period moving average. So a little 0.2% roughly window, pecking on the 10-period moving average on the open. Sometimes we'll see that, and that becomes, even though it's a new intraday low, it'll happen in the morning. And honestly, those are sometimes the precursor move to these things wanting to go. So a lot of times if we start to see, and I'll share this with you as well, the bird in the hand, if this thing starts to populate in the next 7 days or so, keep an eye on these things, because they might just be looking for a reason to fly out of the palm of the hand being that flattened 10-period moving average. So I'll share the last scan here, bird in the hand. Let's just go through a few. I'm not going to set any price alerts. I'm going to leave that up to you guys. All right, so what I would do in this case, I am going to set this price alert for myself here. And tomorrow, if Delta trades above that, maybe it deserves a 20% position, a 1/5 position to start to monitor and see if this flat line can move out. And like I said, it's not going to be a day event. It's going to be a process. Somebody's saying, take a look at NVIDIA. NVIDIA, beautiful close. And again, yesterday, the semiconductors almost led the way. Big strong close in semis and a big pro gap as well. So we talked about the pro gap in silver and gold. We're getting a pro gap here in semis. That's why the NASDAQ finished so strong today. Let's see what else we can find. I really like this one. I was going to hold this one, MDD. Never heard of it, but here's an air conditioning company who posted $6.33 earnings. They're making money. You know, what's their debt to? 27 to 41 in a period of 3 weeks. So I'm going to keep an eye on this one as well. I don't know where I would put the alert. Where do you think you'd put an alert on this one, if any? Probably just above today's highs? Or?
Yeah, that's what I do.
So, and then again, this is just the beginning of a process. It doesn't mean go balls out and jump in. It means, hey, take a 25% look. And then same thing. Let's see if we can get this thing to kind of flatten out and get some closes above, and bird in the hand, maybe 2 weeks down the road, we're seeing some charts that look like that. What else might look interesting on here? BlackRock, no, I don't want any part of that. This is income financial. Yeah, I'm going to kind of stay away from the financials. I'm more interested in something else. Dine Brands, full service restaurants. Here's something that may have been overdone. It was above $100 and it went down to $14. They made almost $6 last reporting period. So this is probably one of those companies that is ready to just bound back. Think of the people when the coast is clear and the horn rings and we all emerge from our little houses and breathe the fresh air. First thing we're going to want to do is probably go out and get a good meal. I would imagine. So I think this one could be interesting as well. I'm going to keep an eye on this one as well.
Hey, Steve, do you mind if I interject?
Yeah, please.
This is one that I bought at $5, and unfortunately, I'm out of it way too soon. But still, this is what you could see with some of the others. Pull up a Dave & Buster's play. And look at that one. And now I was just taking a chance with very, very small, when I say I bought it at 5, obviously I was catching a knife, but I was doing it with such small size that it could drop another $1 and it wouldn't hurt me that much. But look at the move, look at the percentage move you can get when you hit these things. And it's kind of a play. And I'm going to talk about this more on in my Thursday webinar, but what Steve's showing you, a lot of these things are going to do what play did. At some point. Now, not all of them will. I do believe some of them. Yeah.
That could be a great precursor to what you just showed. And then, of course, I'm going to just tease this one more time. We have this new similar tab. Look at that. We go to similar, and what's the number one stock on the similar tab in relation to DIN? It is Play. Play and DIN are very similar. So this is going to be a perfect tool when it comes out in the next few days, guys, for this type of market. We can start to see, oh, what else is in this space that might interest me? This is Denny's. Well, if you don't live on the West Coast, maybe you never heard of Denny's, but same thing. I think these things are ready. Red Robin. So a really cool new feature. Look at that. There's the first inclination of a attempt. Bloomin' Onion. That's going to be, Outback. boom, got caught into the 10 period, but that doesn't mean it's rejected. What if it fights through tomorrow and closes above? Same thing. It's all going to be predicated on that moving average flattening out and getting some closes above it. The similar tab's already out. Oh, okay, I wasn't aware of that. Thank you, Vladimir. So anybody that wants the similar tab, head on over to Trade-Ideas, go to the download and scroll to the bottom of the page to get the beta. The beta is going to have the similar tab, and it's so convenient right now in this crazy market where you start to see the inklings and the hint of a sector coming alive. That similar tab can help you find some great ideas. Chuck E. Cheese. What's the symbol in Chuck E. Cheese? Probably on there.
It may be wrapped up in one of those
Cracker Barrel
conglomerates like DIN. I don't know. There's some of them that own quite a few of them, and I bet you that's the case with Chuck E. Cheese.
All right, so here's another one. I went back to my Armageddon list, same thing, Darden restaurants. Chuck E. Cheese could be a part of Darden for all we knows. And, there are case-by-case basis, but Darden did close above the declining 10. So this sector is starting to look like it's trying to come to life here. This one did post a close above, Norwegian Cruise Lines. They probably wonder how CCL and RCL look. They got rejected. And RCL, interesting.
Yeah, that's really dangerous in those cruise lines, but
Yeah,
that
really
may take
dangerous.
a while for them to come back.
So bring Scott in here to walk us out in the middle, and the reset board is hit again, and all this is for naught. But if we are going to dig in here, and if this is in fact going to be a possible generational low, you got to slowly work your way into it. And I think this Armageddon scan is going to be a great one to show us the ones that have how the mighty have fallen, and it's color coded for only the ones that have given us some decent earnings. There's Play, the one Annie was talking about earlier. And from there, let's take it a step further. Maybe we get a bird in the hand. If this scan starts to fill up, then we're feeling good about my scenario taking place. I'm not going to say it's a long shot. It's a medium shot. We've been watching this stuff long enough to see how these things try to sort themselves out. That's what we're looking for, and that's what we're going to want to see. So that's all I've got for you guys. I'll go ahead and bring the slideshow back on unless Andy wants to add anything.
Nope, I think I'm ready.
All right, so we'll bring Scott back in, and thank you all for attending.
All right, thank you both. So we got a new ebook out, and it is free, so it's great. It's also written by our Chief Technical Officer, Dave May. Trade-ideas.com/earnings is a place you can go to get what he has written for us. It's by our Chief Technical Officer, Chief Information Officer, and he is the guy that brought you Holly and the Odds Maker, that kind of good stuff. We've also got a podcast. We've got a couple new episodes up featuring Dave May, featuring actually David Noss. Actually, that's Michael Noss. I'm sorry. Just search for Trade Ideas Podcast wherever you listen to your podcasts at, and make sure that you subscribe. We've got a code that's good this month, springtime, and that's good for 15% off of your first month or your first year of Trade Ideas, and it's also good for an upgrade, so make sure you take advantage of that if you want to upgrade or get your first month. Steve Gomez is at Today Trader on Twitter. Also follow at Trade Ideas, facebook.com/Trade Ideas Pro is the place to like us on Facebook, and send all your questions to info@trade-ideas.com. That goes directly into our help desk. Thank you, Dave. Thank you, Andy. Thank you, everyone, for attending, and have a good day.
All right, see you next time. Thanks, guys.